Well, hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about the cues for trade, all the global cues, and of course, all the stocks that will be in focus this morning. So, you have the likes of DLF, Easytrip, lots of stocks to watch out for. And of course, we'll also be getting all your stock-related queries addressed by our expert on the show. So if you have any queries, send them in to us on our YouTube feed and we will have them addressed. But before we do all that, let's take a look at the top headlines at this hour. Wall Street notches modest gains on Monday with all three major indices closing July on a positive note. In fact, investors eye important earnings from Amazon and Apple and the July jobs report as well. Asian markets trade largely higher even after the Bank of Japan raises its inflation forecast for this year. GIFT Nifty, however, suggests a muted start for the Indian market. Oil prices rally to a fresh 3-month high and record their steepest monthly gain since January 2022 amid tightening global supply and rising demand. Brent holds above $85 per barrel. Government raises windfall tax on domestic crude oil to 4,250 per tonne starting today, while duty on diesel has been set at 1 rupee per litre. The levy on petrol and aviation turbine fuel continues to be nil. Maruti Suzuki reports a mixed bag in the first quarter as profits and revenue beat expectations, but margins fall short of expectations. The auto major also terminates a contract manufacturing pact with Suzuki in Gujarat and is set to acquire Suzuki Motor Gujarat from its Japanese parent. Also on the show, lots of other stocks to watch out for today, including DLF as it's likely to see a block deal. We also discuss what to expect from July auto sales this time around. Let me get on board my first guest for today, Sacchitanand Uttekar of TradeBulls Securities, joining in this morning to talk about the markets and, of course, to also get all your stock-related queries answered. Sacchitanand, before we talk about specific stocks, I want to get in your thoughts on the index. Of course, yesterday we saw a good recovery coming in, but, July as well has ended on a positive note, even though it was a fairly volatile month. August historically has been a positive month for the markets as well. Would you say that the kind of recovery we saw in the market yesterday is, something that is a precursor to what is coming in the month of August?
Good morning, Nandita. Nandita, absolutely bang on. In fact, we are also of the same opinion that the seasonality effect for the August series could continue. So if you look at the July series itself, the Nifty was trending well above its 5-week exponential moving average, and throughout the series, we did not see any specific closing below the same. So even right now, if you look at the last few months, Nifty has been holding well above this particular level of around 19,540, where its 5-week exponential moving average is trending right now. And it has been almost 16 weeks of a rally. Last few weeks, we have seen some consolidation, but I think that consolidation is very healthy. If you look at yesterday's price action itself, we saw a marginal, uptick in the prices. But the floor at 19,240 looks very confident. On the higher side, a decisive breakout above 19,840 is required for the momentum to again get regenerated. But right now, I think the entire consolidation pattern looks very promising. Before the next leg on the higher side, we expect some more, time-wise consolidation here. So even for today's trading session, we are expecting some range-bound action within 19,840 on the higher side. And lower side, I think the support at 19,660 would be important. On the Bank Nifty as well, yesterday we saw this particular index remaining confined within its previous day's trading range, which is placed somewhere close to around 45,700 on the higher side, and the support at 45,300 looks very confident. So we may see some sideways action even in Bank Nifty getting continued. But net, I think both the indices are looking promising. They are spending their time-wise, consolidation here. And when it comes to Nifty, the moment we see a closing above 19,840, we may see a resumption of this particular rally. So right now, I think it's a good idea to continue on buy on declines, keeping a stop loss on a closing basis somewhere close to around 19,240 on an intermediate level. But from a trading perspective, I think 19,540 would be an important juncture. And once we see a breakout getting established at around 19,840, we may see indices again lifting off towards that 20,120 mark that we are expecting on a positional basis.
All right, so those are the levels to watch out for. 20,120, another one level to watch out for on the Nifty in the coming month. Hold that thought, Sacchitanand. We'll come back to you and discuss specific stocks. But let me also get on board my next guest for today, Saji John from Geojit Financial Services, joining in this morning to talk about Maruti's first quarter performance, what to expect from July auto sales, and of course, I also have a couple of questions on M&M. So hopefully he'll be fielding that as well. Good morning, Saji. Good to have you on the show. First of all, I want to get in your thoughts on overall performance by Maruti. Of course, revenue, I think, has been record quarterly sales for Maruti. Net profit has also, doubled, so to say, in line with estimates. But it's the margin that has come in as a dampener on the back of, employee costs and, maybe ad expenses as well. So where do you see, FY24? How do you see FY24 panning out for Maruti after the kind of performance that it has handed in for the first quarter? Any revision to your targets when it comes to Maruti?
Good morning, all. As you already said that the margin has marginally came down, but what we see is that the overall the performance was good. Though the revenue and PAT came above estimate, margin was below our estimate. There is a one-time cost of 80 bips. The management already highlighted that. Going forward, what we're seeing is that the margin to be above around in the range of 10 to 11%. There are a lot of factors which could support the margin appreciation. One is that the realization got to get the benefit, and the superior product mix the company has. And in addition, the raw material price, there is a stability in the raw material price, and the cost control initiative the company has taken will also support the margin. So we think that going forward, the kind of models the company has lined up for the second half, and the festive seasons also closing up, starting with Kerala in autumn. So we think that the company is able to expand its margin and meet expectations.
All right, margin trajectory expected to get better from here. But let me talk about some of the segments. Of course, small car segment is witnessing a lot of weakness due to higher discounts. But when it comes to the SUV segment, it has gained market share. And of course, we saw a mega launch in the form of Invicto very recently. Do you expect the SUV and this segment rather to drive growth for Maruti going forward, and the small car segment to remain under pressure for some time?
So there is a change in the behavioral pattern of the customers. So you have to understand that. And the Maruti was a little bit laggards on the same platform. So I think that what we're seeing is that the kind of models which the company has launched between the 10 to 20 lakhs range would be a really came through for the company, and the kind of channel, around 4,200 networks the company already has. So I think that will be really going to help, and they have already gained the market share of 20% in the SUV segment. On an overall side, what we see is that there is a behavioral change, and the kind of models they have would be really, would create impetus in the customer's behavior.
Right. Let's talk about the plan to then buy out, Suzuki Motor Gujarat. They are, of course, terminating their contract manufacturing pact with Suzuki and then buying out Suzuki Motor Gujarat from its Japanese parent. Do you think the move is justified, and will it be EPS accretive? How do you expect, or how should shareholders look at this move, given the fact that, are we expecting any kind of difference in, say, sales volume and production, and of course the cost of a car? How should one view it?
See, the deal should be considered as an economics of scale, because what normally the agreement was that they should be manufacturing and selling by the MSIL. So I think both coming into one hub, it would be really helpful for the Maruti, because they are actually dealing with multiple powertrains. So I think bringing everything under one management is really going to help them, and that's going to really help them to even use this opportunity to to get the margin also expanded, because these things, the kind of economic of scale that they are looking for from the project. And on the shareholders' benefit that we are seeing is that the company has already said that it will be considered, and it will be on the book value basis. So I think all the plans should remain the same.
All right. One question I want to throw in on M&M, given the fact that they have made a purchase of 3.5% stake in RBL Bank, and of course, there are reports that say that they are planning to, hike that stake to a little under 10%. But at a time when M&M has exited all its non-core investments, this business would be looked upon as non-core for them, right? So we saw a knee-jerk reaction coming in on shares of M&M as well when the news, when CNBC TV 18 broke the news first. But how do you view this? Because of course we are expecting earnings later this week from M&M. But do you think this will be a overhang for M&M going forward?
See, as you see on the M&M case, always M&M has been trying to get into the banking license, and that's that's largely dependent upon the regulatory approvals. So I think that that you have to see how the regulatory has been looking into it. 3 to 4% and getting into 10% is, as a corporate entity, is just justifiable for me. But why should be using M&M? You can go use M&M Financial Service. So there is some jeopardy in the mind of the shareholders and even the investors. So, but overall, if you see the M&M's performance really good, they had a good clocking sales in the SUV segment. So I think the margin expansion and the stability in the margin is also there. So I think we have to see how the board actually going to look into it, and we have to see how the regulatory approval is going to come on this same thing. Yep.
All right. Lastly, auto sales expected today, of course, two-wheeler segment expected to slow down. So are we expecting even passenger vehicle? Not passenger vehicles. Yeah, two-wheelers is expected to slow down. But do you expect passengers vehicles segment to drive growth, or where do you expect growth to come in? It is expected to be a bumpy ride for automakers this time around amid higher discounts, and of course, as I mentioned, we are seeing weakness in the small car segment as well.
See, if you see on the inventory, the booking level is on the higher side. So I think the SUV sales momentum should continue. And I think, yeah, you can see the overall the volume would be normal for this fiscal year because of the high base of the last year. But there are a lot of margin benefits that the company is going to enjoy. So on the bottom line, you can see that the PAT to be growing for most of the companies. Overall, if you see in the index wise, on a industry is trading almost in line with this historical long-term average. So I think there is a potential for the companies to grow. However, as we see the you have to see how this regulatory approvals, which was been there, which was for the cost of ownership for the companies to vehicles to go up. So, and the discount level, if you see in case of even if I see Maruti, there are discount has also gone up. So how the management will be looking into the how much to be passed on to the customers. So what we are seeing is that the overall the industry growth will be normal. We have a positive rating on the passenger vehicle and a neutral rating for the two-wheelers, and we are a positive on commercial vehicles and a neutral for the tractor industry.
All right, Saji. With that, we're running out of time. Thanks a lot for taking out time and joining in and sharing your thoughts on the entire auto basket with us.
Thank you.
Well, with that, let me shift our focus back to Sacchitanand then. Sacchitanand, I want to talk to you about Maruti. Of course, you have some queries also trickling in on the feed. Post results, how should one view this counter? Just want to quickly run through the brokerages. Nomura has a neutral rating and it expects the overall market share to be stable around 42% for the company in FY24. But it believes that the Suzuki Motor Gujarat deal will not lead to any EBIT impact because, Suzuki Motor Gujarat is itself a zero EBIT business, and cash outgo or dilution of 4% has already been factored in valuation. That's what Nomura says, and CLSA has a sell rating on the stock. target price at 8,796, and it says that if it's a cash deal for Suzuki Motor Group, that it may lead to a decline of 900 crore rupees in FY25 other income for the company. Now we have a query coming in on this stock from Debu K. Wants to know your thoughts. Of course, we are a little under the 10,000 rupee mark for Maruti. Do you expect that to be hit anytime soon? Because the numbers have been pretty much mixed. Margins fairly disappointing, but otherwise it has been a good quarter for Maruti.
Nandita, in fact, the price performance has been very strong. In fact, it has been trending near its all-time high levels. It does have some major hurdles around that 10,000 mark, but eventually we see this particular level again getting breached. From a long-term perspective, we are of the opinion that 10,800 to 11,000 swing could be seen in the coming future. And the base that we are seeing from a trading perspective is well established, somewhere close to around 9,600 even right now. So in case if we see a reaction to this particular news flow, then I think again it will be a good opportunity to accumulate this particular counter. There are no signs of any major divergence when it comes to trend strength. If you look at the weekly and the daily RSI, both are exhibiting a good, strong bullish crossover. And most importantly is the placement of its monthly ADX, which is about to cross that 25 mark, which will be a strong sign of a strong trending momentum. So we are expecting that eventually this particular hurdle of around 10,000 will be reached on a weekly closing basis, and we may see a momentum getting continued during this particular month itself towards 10,200. But the eventual target that we are highlighting is somewhere close to around 10,800, 11,000. So yes,
right.
In case if for decline, it should be accumulated.
All right, accumulate on declines. That's the view on Maruti. Couple of queries coming in on UPL. Vinod Kumar and Karthik also want to know your thoughts on UPL. Of course, weak set of numbers. Stock has been in a downtrend over the last 1 month. It has lost somewhere around 9%. More weakness on the charts post this, poor show in the first quarter?
Well, it has been on a declining trend since last 1 year itself. And if you look at the overall price performance for the last 2 years, it has been oscillating within this particular range of 800 on the higher side, and 600, 620 has been a decent support. So I think this particular news flow could be the end of this particular downtrend that we have been witnessing in this stock. If you look at the daily RSI, there are signs that there could be a positive divergence in the making, and once the stock swings towards 610, probably this particular declining trend should get exhausted, and probably we may see a reversal kicking in once about 630 mark. So right now, I think it's not a good idea to continue with your short positions. In case if someone is riding onto them, I would recommend booking profits near to 610, 605 mark.
All right, that's the call on UPL. Hope that answers your query. Let me talk about the stock of the day very quickly. DLF in focus today. Of course, promoter group is likely to share shares worth, somewhere around 1,000 crore rupees or thereabouts. That's according to sources. And share sale, of course, will be via block deal, and the issue price is at a 3% discount to the current market price. DLF, of course, has been a breakout stock, so to say, over the last 6 months. It has nearly doubled, and it's now at 52-week highs. Higher highs on the charts?
Well, the sequence continues, and in fact, the recent rally that we saw from the base at around 430 clearly exhibits an impulse wave characteristics. We are of the opinion that during this particular series itself, we may see DLF swinging towards 545, 560 kind of a zone. So even here, the floor is very certain at around 430. So any declines towards 510, 500 zone, I think would again be a good opportunity to accumulate the counter. On the lower side, one can place the stop losses somewhere close to around 488 on a weekly closing basis and continue holding and accumulating this particular counter for an eventual target of around 560.
All right, that's the view on DLF. I want to get in your thoughts on IEX. We have a query coming in from Vishal Thakkar. Wants to know your thoughts. Now, I think this stock has been, I think, stuck in a range, down 3% over the last month, pretty much flat with a negative bias yesterday. How should one trade into this counter now, IEX?
For me, the major trend still remains weak. We are expecting that this particular counter eventually should slip towards 90 kind of a zone, and it does display some bounce backs during this particular course. But eventually, what we are seeing here is that the breakdown which happened at around 145, 140 zone, prices may not elevate towards that level soon. And any rise in this particular counter due to some short covering could be again utilized to create fresh shorts. But the major trajectory for this particular counter still remains negative. Any opportunity on the upside should be utilized to liquidate positions and probably create fresh short positions. We're expecting a price movement towards 90 eventually.
All right, that's the view then. I hope that answers your query. Let's take up a query on GMR Infra. This one has come in from MS. Wants to know how to play this stock now. Of course, the stock has done fairly well, up 11% in the last week or so. Of course, at 52-week highs as well. In the infra pack, how is this poised now, GMR Infra?
Well, it's a strong trend, but the momentum has been very strong. In fact, for the last 5 trading sessions, the stock is, trending away from its 5-day exponential moving average. So even right now, if you look at the placement, the 5-day exponential support is placed somewhere close to around 49, and the price is trending somewhere close to around 52, 53 mark. So chasing momentum may not be a healthy idea. Probably one should wait for a correction or a consolidation, and then probably some aggressive long positions can be considered. But as of now, in case someone is holding on to existing longs, the trailing stop loss should be placed somewhere close to around 51.
All right, that's the view on GMR Infra then. One query on PCBL, Philips Carbon Black. Hari Shankar wants to know your thoughts as to what should one do, buy, sell or hold. The stock is somewhere around 158 or thereabouts, some 20 odd rupees away from 52-week highs. Do you suggest buying on dips, or would you say that it's time to hold on for the long term?
Well, definitely the stock can be accumulated. If you look at the monthly structure, recently we saw it breaking out from a larger degree cup and handle formation. The price target for this particular pattern is placed somewhere close to around 195, 200. Even right now, the kind of surge that we saw, recently, that particular surge is again an impulsive formation, and the recent ongoing correction looks very comfortable. So even if we have slippages towards 140, 135 kind of a zone, I think that will be a good level wherein the stock can be accumulated. The major pattern support is placed somewhere close to around 140. So that's why I think keeping a stop loss somewhere close to around 130 would be a good idea. And the stock can be accumulated in one's portfolio on a decline for an eventual target towards 190.
All right, I'm afraid we're running out of time. This brings me to the end of the query segment. But of course, if your query was not answered, don't worry, I'll try and take it up tomorrow. But Sacchitanand, before I let you go, your stock recommendations for our viewers?
Nandita, 2 stock ideas. One is on repeat. Last week also we shared this particular bullish bias on SBI. Eventually we are expecting a price target of around 640. So even here at this juncture, we are advising to build aggressive long position there, keeping a stop loss somewhere close to around 616. The second stock on our radar, which has come, is LTI Mindtree. Yesterday, we saw very strong price performance and engulfing bullish kind of formation right near the support area of around 4,800. So we are expecting an eventual movement towards 5150 on a positional basis. So even this particular stock should be accumulated with a stop loss somewhere close to around 4870. Disclosure would be that we have recommended both these counters to our clients as well.
Right. Before I let you go, Sacchitanand, one last stock I wanted to ask your view on is PVR, given the fact that the numbers will be coming out today. And of course, we've seen some big ticket releases over the last few weeks. How should one play this ahead of earnings?
Well, I think the major bottom for this particular counter is placed at around 1400, 1380 mark. And we've already seen a very strong lift off. The stock is again back trending above its 200 weekly exponential moving average. But recently, I think, this 1600 hurdle looks very clear. So probably it may take some breather here. But the major trend, I think, seems to be reversing. So any declines would be a good opportunity to accumulate the counter. Eventually, we see this particular stock, rallying towards 2180 going forward. So any declines could be healthy. So it will be a good buy on declines counter for an eventual positional target of around 2180.
All right, buy on dip should be the strategy for PVR. With that, Sacchitanand, thanks a lot for taking out time and joining in this morning, and of course addressing all of your queries as well. With that, we have completely run out of time on this edition of Morning Trade. Thanks a lot for tuning in, but of course don't go anywhere, because coming up next is Opening Bell. From me and the entire team, thanks a lot for watching.